Does the slowdown continue, as a lot of people have discussed over the past couple months? Or are we starting to see evidence that the slowdown was illusory, that it was never occurring? Well, let's check the data and see. I am Justin Miller with the Chong Miller Group. We help people buy and sell homes in the Las Vegas Valley. So this is the December 2021 real estate market update for single-family residential resale in the Las Vegas Valley. In November of 2021, the median sales price increased by $9,500 to $417,000. That's a 2.3% increase. Now, this is similar to the increases we'd seen earlier in the year at $10,000 per month. There had been a couple months in the middle of the year where we were seeing kind of stable prices. We'd hit $402,000, we went to $407,000, and that took us a few months to get through that particular area. In some manner, $400,000 may be a psychological barrier. We had been stuck at the $300,000 plus or minus $3,000 for a little over 1 year back in 2019. So it's possible that there'd been a psychological issue about, well, maybe prices are getting too high. I think actually what we were seeing was the digesting of a lot of transactions that had taken place early in the year, record numbers of transactions, and people trying to figure out how best to address this market. I don't think there was actually a slowdown, and we did not see that slowdown happening in terms of transactions. More about transactions in just a couple minutes. So 417,000, that's up 2.3% from where we were at the end of October 21, but that is actually up 21.6% from the 342,850 that we were at the end of November of 2020. Now, for those of you who've been paying careful attention, you'll remember that January was 340,000. So yes, we actually dropped last year. November to December went down to 340. January was 340, so it had been flat at that, and then took off at an escalating $10,000 per month for 5 or 6 months of this year, early in the year. So we're up actually 22.6% in the 11 months year to date, $77,000 of price appreciation so far over 2021. Now, I don't think that level of appreciation is actually going to continue in December. I was actually surprised by the level of escalation that we got in November. I did not think that November pricing would be this strong. But I will suggest that this may have been partly predicated on a slight change in the mix of houses that were actually sold. For those of you who've been watching my market updates on an ongoing basis, you'll know sometimes I pull in price per foot data to show what may be happening in terms of the mix of properties. Price per foot should be going up in line with median price. So in other words, as median price goes up 1%, price per foot should go up 1%. Goes up 10%, should go up 10%. When there's a mismatch, it suggests there's actually a change in the mix of properties that may be selling. Why do I say that? Because not all properties trade at the same price per foot. Some will trade at higher prices per foot, some at lower prices per foot. And this actually makes trying to buy or sell a property on a per foot basis really hard. In some markets, you can do it. In the Las Vegas Valley, there's actually massive range in the price per foot qualities for a particular property based on newness of a house, based on the quality of the fixtures, based on the way in which the yard exists and has been taken care of. And so nonetheless, we actually see, kind of interestingly, small properties kind of have to be priced at a higher per foot basis than large properties. Single story houses tend to be priced above 2-story, 3-story houses on a per foot basis. just because you have expensive things that have to go into any house, the concrete foundation, which is bigger on a single story house than on a multi-story house, the glass windows, the appliances, the toilet fixtures and shower fixtures, those are more expensive than air sitting in the middle of a room. And so small houses tend to be more expensive on a per foot basis than larger houses. But when you get into the guard-gated neighborhoods, when you get into the highly landscaped properties, when you get into properties that have the Guggenau kitchens and other things like that, prices per foot start to go up pretty quickly. And so at the very high end, price per foot is very high. And so that will skew the price per foot number for the median transaction during a particular month. And as we see that number go higher more rapidly, we know that the mix of housing is changing toward the higher end or towards smaller. And as we see the median price per foot skew below, then we know that actually says it's sort of that middle of the market that is where an increasingly large dominance of the influence is. Well, price per foot for November of 2021 was a record $232 per foot. That was up 2.2% from the prior month. That's very much in line with the 2.3% for median sale price. But we are up from 182 per foot at in November of 2020, and that's up 27.5%. That's as opposed to median sale price up 21.6%. So that delta suggests that during the course of this year, sales have been skewing toward the higher end of the market. A little bit, not dramatically, right? The median sale price is still the definitional middle of the market. Half of transactions are above, half are below. But if we're seeing more $1 million properties transacting, that pulls the middle transaction a little bit higher. Have we seen more $1 million properties transacting? Through the middle of November of 2021, we had seen an average of 116 properties priced at $1 million or higher transacting. As we closed out November 2021, that average had actually been pulled up to 129 units, $1 million and above units transacted per month. So that's a significant skewing of that statistic, which suggests that we had a significant number of those expensive $1 million and above units transacting in November, a little bit larger proportion of the market than we might normally expect. So I think that that's a little bit of why the price was pulled all the way up to 417. For December tends to be the weakest month of the year, both in terms of price and in terms of number of units transacted. So I think that we'll see that price probably not hold. I'm projecting it's actually going to come down a little bit in December. That's not weakness in the market. That's just a little bit of a change in the mix of the product that's transacting in the market. I'm Justin Miller with the Chong Miller Group. I produce these videos to put valuable real estate information into the public domain. If you find these videos to be interesting, helpful, or have usable content, please subscribe to our YouTube channel. And as they say in the YouTube universe, please smash the like button. That way I'll know to continue to produce videos like this. Thank you. And now back to our show. If I'm thinking I want something to sell, I've got to price it according to the market. And that means that if I'm priced according to market, things should be selling. Well, how many things sold? You're not going to believe this number. 3,162 single-family resale homes sold in Las Vegas in November of 2021. That's an incredibly strong number. That's the fifth highest month for transaction volume in 2021. And remember, 2021 saw 2 months that had higher transaction volume than any other month in the history of Las Vegas Valley. We're the fifth highest month. In a month, it's normally down. November is usually a down month for volume because you've got fewer days in which banks are open, fewer days in which escrow companies are open, fewer days in which the county recorder's office is open to be able to actually close the transaction. Plus, you've got people wanting to take time off to spend time during the Thanksgiving holiday. And so November tends to be a down month. December actually further down. December tends to be the weakest month of the year, historically. Not only was this the fifth highest month for already a very strong year, November was above the average for all of the months of November. The average came in at 3,123. We're up 39 above the average month for what's the strongest month we've ever seen the strongest year we've ever seen in the Las Vegas Valley. And this is the greatest number of transactions that have taken place in any November in the Las Vegas Valley. So really, really strong month. And by the way, to give you just kind of a comparison for averages, since I gave you, it's 3123 average month in 2021 through the first 11 months. It was 2,504 for 2020. Remember, 2020 ended about tied with 2019, and that was considered to be a really strong year. The strongest year previously had been 2011, 3,014. So we are up 150 approximately, 148 from the median that had been achieved in 2011. Really, really strong November in terms of home sales. And we did that with record pricing. Just a blowout number. This is not the housing market has weakened. This is not the housing market is turning down. This is just an incredibly strong demonstration of what's actually taking place in the Las Vegas Valley residential real estate market. Significant demand in the face of rising prices. Well, it could be that the numbers were just skewed because numbers were being pulled from October, and October closings were low. October closings were actually not low. They were strong. It could be the numbers have been pulled from December, and we'll just see a really weak December. Well, pending home sales should give us some indication of that. Pending home sales in November, 3,077. That's down. It's down as we would expect seasonally from the 3,197 pending home sales that we saw at the end of October. But that's not down a lot. And in fact, it's up 13.0% from the 2,722 pending home sales that we saw last year at the end of November. And December was one of the strongest months in 2020. So we have what looks like should be a strong, relatively speaking, December, although I do believe it's going to be down from these blowout numbers in November. So that tells us a little bit about what's transacting in the market. It tells us a little bit about what we might expect for December. But there is something else that's really important, and that is inventory, the standing inventory. How many houses were available for sale as we go into the month of December? That number is more challenging. 3,312. That's down. That's down 21.9% from the 4,240 that were for sale in the market at the end of October. That's a big drop in the number. That actually takes us to the lowest numbers of standing inventory that we've seen since 2007. That number is also down 41.1% from what we saw in November of 2020. Now, remember, what we saw for standing inventory in November of 2020 was leading us into acutely low levels of inventory, acutely low levels of supply, in the first quarter and really the second quarter of 2021. We've got less standing inventory right now than we did last year at this time. And we have higher home sales than we did at this time last year. And frankly, we have higher pendings than we had this time last year, meaning home sales are already lined up to be coming out. Folks, we're setting up for similar kinds of problems next year as we had in the first part of 2021 in terms of a lack of properties that are available for sale. Now, standing inventory, we've got two ways that properties come into inventory. One is new listings, the other is return to market for things that had been in contract as a pending and fallen out. So let's look at new listings. New listings, 2,800. That's down 21.7% from the 3,577 new listings that we showed from October. Now, seasonally, we would be going down. This is a little bit more than a normal seasonal decline. This is up slightly. It's up 2.7% from the 2,726 that we had in October of 2020. And so, again, this is not enough coming into the marketplace to make up for what's actually going out of the marketplace. In fact, new listings is dwarfed by the number of units that sold, if you will, came out of inventory. It's also exceeded by the number of units that are in pending sales status. So this is not enough to keep inventory even flat at a level that's already way below where we were last year. Now, back on markets. Back on markets are contracts that have failed in this year. Many, probably the majority of contracts that are failing because of appraisal problems. Continues to still be a problem dogging the market, but the back on market numbers have come down a little bit. We're actually up 29 from where we were in October. We're 1,034 back on market. We're up from 940 back on market in the pre-pandemic year of 2019. So we've got some additional coming into inventory through the back on market process. Remember, if a pending contract fails, the seller is either going to say, fine, let's go back into the market, or they're going to pull their property off the market entirely. So those usually go back into inventory. Now, one other comment that I do want to make, and that is as related to new construction. I say this every several months, just to give an indication of why the numbers I present to you are a little bit different than the numbers that you get from some of the other sources. When the Las Vegas Realtors Association, LVR, publishes every month their membership data, they publish it with all of the listings that are in the multiple listing service. And they do that as a press release. And most people, including the news associations here in Las Vegas, tend to take the press release and just simply read from it. The problem is the press release, because it includes everything, includes new construction property that builders have decided to put into the MLS. Only a fraction of new construction properties make it into the MLS. The problem with the fraction is it was builder selected, and it was builder selected with some motivation. We don't know what that motivation is. It could be they had a couple extra houses sitting in inventory that hadn't sold, so they put them into the MLS and sell them through a regular process, just like as if they were standing inventory for resale homes. Could be, and sometimes it is. It could also be that a developer says, wow, here's a great transaction that somebody built this house and they're going to close tomorrow. And we want to give ourselves a comp so that appraisers can see the comp, the comparative sale number. And so we're going to put this into the MLS. And it shows it goes into contract in 0 days or a day or 2 days. It shows that it closes in 1 or 2 or 3 days, so maybe a week. And it has a high price. Well, That's nice, but it is in some manner misleading. I don't want to say manipulative because I don't know that it's specifically that, but it's misleading as to the value of the resale properties in the Las Vegas Valley. So where are the statistics for those properties that were not resales that made it into the LVR data that go into the press releases that other people tell you about? There are 120 new construction properties that went into the MLS that closed in November. They had a median sale price of $480,154. That's high, right? That's high relative to the $417,000 for actual resales. So it skews what gets reported in the press release and gets reported in different outlets. The number higher, the median sale price. And this is a really good example of how the mix of properties can change the median, even though it's not nearly as sensitive to changes at either end of the price spectrum as a mean. It still changes the mix and pulls 120 new properties at $480,000, increase the median sales price from $417,000 to $420,000. That's a $3,000 change. And because developers are the ones who are, for their own reasons, picking which of these properties go in, that skew varies every single month. Last month, it skewed the prices up by $2,500. So I pull that data out to give you a cleaner picture of what's actually taking place in the resale marketplace. That's why my numbers are a little bit different. They're consistently a little bit different than what you get from just the press release from the association and what gets parroted into a lot of other environments that talk about what's going on. Hi, I'm Justin Miller, and we are the Chong Miller Group. At the Chong Miller Group, we help people buy and sell homes, and we specialize in helping you, our clients. If you're not yet one of our clients, reach out to us. Give us a call, send us an email. Let's see what we can do for you. And now back to the show. All right, so that is what happened in November of 2021. If you need help as a buyer, please feel free to reach out to us. Frankly, if you're a buyer in this market, you really need assistance. You need professional assistance. This market is moving rapidly and dynamically, and if you don't have somebody who really knows what they're doing helping you, the market will move away from you. And that does not mean you need to hire a real estate agent to tell you to pay more. There are different ways you can deal with this market. That's one of the ways you can deal with it. But there are other possible solutions. Real estate agents should be versed in all of the different things you can do in a particular marketplace. We certainly are the Chong Miller Group, and we would love to help you with these kinds of issues. If you're a seller, know this. There is strong price sensitivity in the Las Vegas Valley. If you're priced too low, great, you'll get multiple offers, but you may actually end up with a sale price which is lower than what you expected. If you price too high, you could be sitting on market a long time with no offers. And we still see, even in this really tight inventory environment, properties sitting on market for really long periods of time. You need an agent to help you figure out what the right price is for your property, how to market your property, how to engage in the sale of your property. Reach out to us at the Chong Miller Group. We would be happy to help you. These are issues that we deal with day in and day out. We're really good at it. So I am Justin Miller with the Chong Miller Group. We look forward to talking with you. Thank you.